good afternoon. Welcome. You're watching Your Stocks. I'm Samira Abdi and with me is Mangalam Malu. And well, it looks like it's turning out to be a very, very good afternoon of trade. So from the lows around 11, we have moved up quite a bit. Now up about 0.5% on the Nifty. In fact, look at the mid-cap index go about 1% higher over there. So that's a 200-point up move. Apart from the banking stock, looks like most others are doing well. So all in all, Monday is looking not so blue. In fact, it's green.
Absolutely. It is a fair shade of green. And yet again, it proves the one thing that, wherever there are dips, the bulls will go ahead and latch onto them. Because the intraday chart of the Nifty tells you that just briefly around 11 a.m., the market moved into the red. And from there, we've seen big moves. But levels closer to 14,100 is something where we're seeing some bit of supply. Let's see whether that continues or not. But across the board, we are seeing gains. First up, all the top stories that we're tracking this afternoon. Stocks open higher on vaccination hopes plus strong growth in bank loans, GST collections and auto sales. Trade near highs of the day for the markets after a small dip. The metals, industrials and autos lead. Mid-caps outperform.
Finance Secretary tells cnbc TV 18 that the budget will take forward measures under Atmanirbhar agenda and that a review of excise duty on fuel is underway. Adds that a formal proposal on vaccination is awaited and following this, budgetary allocation will be made. The Secretary of Ministry of Power tells cnbc TV 18 that Power Grid's monetization will kick off very soon. Adds that discoms, which have the highest receivables from state government entities, will be given liquidity by PFC only on performance conditions. And the oil-to-digital major Reliance Industries releases a statement clarifying that it has no interest in farm laws or contract farming and that it always insists on its suppliers adhering to MSP while buying food grains. Car and tractors saw double-digit sales growth in December, while medium and heavy commercial vehicle sales show visible recovery. In two-wheelers, TVS and Bajaj sales soar. Hero sales are modest. Stocks of Ashok Leyland, Bajaj Auto hit fresh highs. All right, so let's get started with your stocks. Gaurang Shah of Geojit Financial Services and Ashish Kyal of Wave Strategy Advisors join in now. Gentlemen, good afternoon to both of you and a happy new year too. Our first query comes in from Prakash Jadwani and he's on the line with us from Vadodara. Mr. Jadwani, good afternoon, sir. How can we help you?
Good afternoon. I have a question. I am interested in buying DCB Bank or IDFC Bank, First Bank, for long term.
Okay.
I want to buy about 4,000 to 5,000 shares. I want to know which will multi-bag faster, technically and fundamentally.
Okay, you have a portfolio of banking stocks, or are you a regular investor?
Yeah, I am a continuous investor. I do study the balance sheets and technically and then take decision. So I would like to create a position for multi-bagging on long-term basis.
Okay, doesn't everybody, Mr. Jadwani?
Which one is the faster one?
Okay, well, Gaurang, first to you. So we have an investor here, Mr. Jadwani, who's, he's done some bit of analysis, but he's looking to have it ratified by our experts. So what's your call, DCB or IDFC first?
Thank you, Sumira, and wish all of you all at cnbc TV 18 and all the viewers of cnbc TV 18 a very happy new year. And multi-bagger, definition differs, Sumira, from investor to investor. But I think on a conservative side, on the fundamental basis, if you're getting maybe about 10 to 15% return per annum on earnings improvement, I think it's a decent investment and you need to keep it in your portfolio for a longer period of time. So I will restrict my comments to IDFC First Bank because that is where we have a coverage. On DCB, we have dropped the coverage. So if you're wanting to invest into IDFC First Bank from a longer period of time, I think it's trading somewhere close to about 38 or thereabouts. Don't park all your money at one time. Use dips to add on to your stock, but at least allocate 25 to 30% at current levels and balance on corrections, go on adding to it.
All right, that's a view coming in as far as, IDFC Bank is concerned. But Ashish, your views on the same?
Both DCB and IDFC Bank had been an underperformer within the banking space. And if you look at it, both chart structure looks very similar. So I would prefer IDFC Bank. As of now, the momentum is there. So as long as the momentum continues, one can hold on to it. Or rather, if he's okay parking money, then Kotak Bank looks much more promising, because over there we have seen a very strong impulsive rise. Given that impulsive rise, the stock can continue to ride and give multi-bagger returns over the period of time. But don't look from just 1 year perspective. Increase your time horizon to 2 to 3 years. We have already seen a lot of volatility in the year 2020. We expect 2021 to be a year of consolidation for now.
All right, fair point. Then with that, we move on to another query. This one comes in from Bengaluru. Mr. Yalamali writes to us, holds about 632 shares of Sterlite Tech at an average price of 138 odd rupees. Wants to know whether to hold or sell. Well, Gaurang, as far as Sterlite Tech is concerned, we had the management here on cnbc TV 18 some days ago, and the capex in China, or increasing 5G capacity for China, does well for them. Do you think this is a good bet? He's sitting on some money. Should he continue to hold or maybe book out?
So Mangalam, we do have a coverage on Stertech, and if I'm not mistaken, our targets are somewhere close to about 200 odd rupees. So maybe once you get those levels, you can take money off the table, and if you're willing to reinvest your capital and profits that you earned it back again, or plow it back into the equity market, then from private sector bank, Axis Bank would be a preferred investment idea from a long-term point of view. That is.
It's 194 already, Gaurang, and your target is 200. Do you think for 600 shares you should wait for the 6 rupees, or maybe just get into another attractive opportunity right away, or maybe start booking profits, if not entirely?
Well, you can do both. Well, if I was in his place, I would possibly take all my money off the table, not wait for 6 rupees. I think we're making already some 40, 50 odd rupees. That's much larger. But if you're really hungry for more, I think a staggered selling approach would not be a bad idea. But try to book out closer to 200 or thereabouts, starting at current levels, and then at higher levels sell it off, and shift into private sector bank like an Axis Bank.
Okay, the next query comes in from Akshay Mudliar, who's on the line with us from Bengaluru. Hi, Akshay. How can we help you?
Hi, ma'am. So, can you hear me?
Yes, go ahead.
Okay, so actually I have a query regarding the buzz which we all are known about, the electric vehicle by 2030. The government is giving a lot of push for the electric vehicle segment. So my query is, for the longer term, I mean around by 2030, which 2 or 3 stocks can I look or can I keep in radar which will benefit from this electric vehicle buzz?
Okay, Gaurang, this is right up your alley. The e-vehicle beneficiaries, anything that you want to recommend?
So I think Tesla coming into India is also a huge disruption, Sumera. And what my understanding is, I stand to be corrected if I'm wrong, that all the automobile players, whether it is 2-wheeler, 4-wheeler, 3-wheeler or commercial vehicle manufacturing companies, all of them are geared and looking forward for this rollout, a very structured rollout of electric vehicle and its policy. There are a lot of choices available, and most of these companies have their prototypes at a very advanced stage. And I think what clarity we need, Sumera, is the charging infrastructure and how are we going to go about it. That's going to be a little bit of challenge. But having said that, I think if I need to identify 2 investment ideas, one from 2-wheeler and one from 4-wheeler stroke agri stroke commercial vehicle, then Hero MotoCorp and M&M would be the 2 preferred investment ideas.
All right, so you're suggesting maybe move away from the entire EV space and go into 2-wheelers as well as the agri equipment. Ashish, your thoughts? 2030 seems a far way off, but whatever little experience I've had of understanding cars or something, maybe 10 years from now, more than the hardware, the software of the cars will be important. But what do the charts suggest? Which one is the one which is likely to last for the next 10 years?
See, if you look at nearly stock of Maruti Limited, we have clearly seen a huge correction in the entire auto space over past 3 to 4 years time. And Maruti has also corrected sharply. We can see the lows formed in the March and then bouncing back. So I think this is the apt time to get into stocks like Maruti, which has promising returns over the investors. Over past many years, it has done that. It has consolidated now, and I think it is about to start its third wave on the upside. So when I talk about third wave, it's normally the longest and the fastest, giving the maximum return in the shortest possible time. So I think Maruti can do wonders. So one can look forward to invest in this stock. The other stock can be Eicher Motors. It has also managed to strongly outperform from the lows of around 1300. It is now trading around 2700. So if you get any dips in Eicher Motors, you can possibly ride this third wave on the upside. And I think auto can start outperforming from here on over the period of years. So auto can be the best space, and Maruti and Eicher Motors are my two top picks in this space.
Right, Mr. Mudaliar, you have 4 picks to choose from now. Go ahead, and we wish you good luck with your investments. With that, we'll slip into a short break. But as we do that, here's some market opinion coming in from Sridhar Sivram of Inam Holdings on the current market rally and the sectors he is bullish on. Listen now.
My 25 years, we haven't seen anything close to this, where the market corrects so fast sometime in March, and then we see such a sharp recovery. I think the only other period that comes to my mind is 99-2000, when the markets went up vertically for a year, specifically for the the tech stocks. That's the only distant memory that I can have which has any similarity to this. But obviously, we all know this is a sharp liquidity-driven rally, and normally the last leg is very ferocious. Some of these banks, their pre-provision profit is lower than their market cap. Now, just to put things in perspective, for a private sector bank, the market cap is about 10 to 15 times their pre-provision profit. So that is the extent of mispricing that we were seeing. Yes, what is the risk? Which is, of course, the fact that the processes are not great. The NPA cycle, we still don't know where it is heading. But even adjusted for the fact that many of these PSU banks now have provided almost 70%. Plus, there is a hope that things like DHFL and Bhushan will get resolved at some point. They're all 100% provided. We're also bullish on the private sector banks, but the risk reward on the PSUs are looking far stronger right now. I would be a bit cautious as far as autos are concerned. These stocks have really rallied very sharply. I wouldn't chase them right now. And as you mentioned, there is also, companies which are dependent on exports are also facing some sort of a container shortage. Plus, keep in mind that commodity prices have significantly gone up, and I don't think they will be able to pass on everything. So as much as the demand is strong, there are a number of other variables which are working against them right now. So if our bullishness was substantially high, say 3 to 6 months back, we would not be so bullish chasing these stocks right now.
Welcome back. The party in the mid-cap space continues. 230 points on that index, almost 1% higher. And we have Vedanta, which is shooting off the charts right now, up 6%. Apollo Tyres, Mahanagar Gas, PVR itself up around 4.5%. Remember, cinema halls in Tamil Nadu are now allowed to open with 100% occupancy as against 50% earlier. So good news for all of them. But let's talk about Tamil Nadu, Chennai itself. Our next query comes in from there. E. Natarajan writes to us, holds about 5,000 shares of Tata Coffee at about 114 odd rupees. Wants to know whether to hold or sell. Gaurang, fathom a view on Tata Coffee?
Well, if I have to compare two stocks, Tata Coffee and Tata Consumer Products, then Tata Consumer Products has outperformed, in fact, Mangalam. And we don't have coverage on Tata Coffee. My advice would be to, if you want to move your money into Tata Consumers, even at current levels, 600 plus, if I'm not mistaken, I think it will be worth it from a long-term point of view.
Okay, Ashish, what do you recommend?
See, Tata Coffee had been consolidating over short term in a narrow range. It has not done anything over past few weeks, but it has a very important support around 100 levels. I think it's forming a triangle kind of a pattern. Can give a breakout on the upside, but for now, it's best to wait for this stock to break above the trend line, which comes to around, say, 113 odd levels. If it breaks that level, then one can expect a target of 120. Use a strict stop loss of 100 for now, because that's the neckline from where it has bounced back.
All right. With that, we have another query coming in from Kolhapur. Amrut Atre writes to us, holds about 15 shares of Siemens at 1,100 rupees, 5 shares of L&T Tech Services at around 1,850 odd. Wants to know whether to hold or sell. Sitting on some profits in Siemens, L&T Tech should come up for you as well. Some amount of profits out there as well. Between these two, Gaurang, what's your view? And were he to shift from one to the other, would you recommend that, or maybe stick around with the investments that he has?
So Mangalam, we have coverage on both from a long-term point of view on the fundamental side. And my advice would be that, when you have small quantities, you should take advantage of market correction and add to Siemens and L&T Technologies. Now, both the names have got a proven track record in terms of earning visibility, great management. And of course, in terms of their visibility and order book execution, as far as Siemens is concerned, there's absolutely no doubt. L&T Technologies, I think from the time the IPO hit the market and the stock got listed, it has given multifold returns and it will continue to deliver on earnings as well. So I would say that hold on to both and use dips to add on to both these stocks from a long-term point of view.
Okay, the next query comes in from Aman Gilani. He's written in from Pune. He has 30 shares of VST Tillers, which he has bought at 1922. And he also has 50 shares of Coromandel International at 785. He's a long-term investor and now wants to know what to do. Ashish, on both stocks, what would you recommend that Aman do?
See, VS Tillers, if you look at it, I would say from the short-term perspective, the volumes have been erratic. Suddenly there is spurt in the volumes and it dries out. So as of now, he can hold on to the stock, not from long-term, but look at it from the short-term perspective, because if it corrects, the correction comes out to be very sharp and fast. And that's why using stop loss is very important. For now, the stock has continued to move on the upside. It has bounced back from an important 20 days average as well. So hold on here with a stop loss of 1930 for the target of 2130 on the upside. As far as Coromandel is concerned, I think the stock is just not doing anything. It's just tried breaking above that 850 mark, but again came down and just consolidating there. So it's best to be out from this stock, maybe because there can be short-term correction that we can expect here. But VS Tillers, he can hold on from the short-term perspective.
All right. The next query then, we have Naresh Chandra writing to us from Andhra Pradesh, holds around 75 shares of L&T at 911 rupees. Long-term investor wants to know whether to hold or sell. Gaurang, for L&T, we don't know when he got in because the stock had been underperforming for so long. But now that he's bought it for 911 rupees, he's sitting on a good 30,000 odd profit because some mojo on L&T and all these stocks seems to be coming back in the last couple of months. Do you think it's likely to last and he should hold on, or maybe book profits now that he's making money?
Well, if you have time by your side, I would say hold on to it. And I think very recently L&T has bagged some very interesting orders in infrastructure as well as hydrocarbon. And along with that, the core business is likely to gain momentum as we see CapEx cycle picking up, Mangalam. So if you're not in a hurry, hold on to it. And you have the defense business also playing out well over the next 2 to 3 years.
Ashish, your take on L&T?
See, L&T has continued to show a very strong rise from the lows of around 900. It has shown an impulsive move. By impulsive move, I mean it has continued to spend a lot of time while going up and very little correction that it is showing. So I think as long as the stock does not break the prior day low, at least over short term, one can continue to hold on to the stock. We can expect a target of around 1370 on the upside. His entry is classic at the lows that he has done. So hold on to it, keep trailing it, keep riding the trend, book some partial profit if required, but keep riding it from short-term perspective. And the stop loss of 1280 can be maintained for now.
All right, Ashish, thanks a lot for that. In fact, on that note, we'll thank both Gaurang as well as Ashish for stopping by, taking the time out, helping all our viewers with both their fundamental as well as technical queries on investments and trades. And before we wrap up on this edition of Your Stocks, just keep an eye out on a handful of stocks. We have the broader markets doing rather well. Apollo Tyres continues to gain up at the high point. DLF as well, the real estate pack continues to do well. In fact, the stock has more than doubled from lows that we saw in March and did very well in 2020. Continues to do that in the first couple of days of 2021 as well. Voltas moves to the high point, and Aurobindo Pharma, of course, has been doing well all through the course of the day. But so far from the team of Your Stocks, we'll only say that the mid-cap party continues. We will take a short break, come back. The team of Closing Bell comes up next.